Hello traders, the title of the video is example of a deep fourth Elliott wave and what causes it. Alright, so we want to know what can cause a very deep fourth Elliott wave. The main factors that can cause a very deep a fourth Elliott wave. So you may say to me, Joe, you have been saying for years that very often the fourth wave is usually very shallow. In every video, you were talking about a shallow, one should expect a shallow fourth wave. Why are we talking today about a deep fourth Elliott wave? And also, George, I have a question for you. Which fourth wave is considered deep? All right, that's a very good question. So we're going to cover all those questions. First, we'll tell traders, the cause, all right, that the main factor that causes, the main factor that will cause the deeper fourth wave, and also when can we consider a fourth wave to be deep, all right? So generally speaking, when we are using the Fibonacci retracement, we are talking about measuring how much the price went down if it went up before, or how much the price rally after a down move, all right? So we use the Fibonacci retracement to measure those in percentage. We say 50% retracement, so which means people take 50% profit and so on and so on. So when we say that the fourth wave is usually shallow, what we are saying is that generally, in most cases, it stopped somewhere near the 38.2% Fibonacci retracement of the third wave. The reason is because the third wave is quite strong bullish momentum in an uptrend or strong bearish momentum in a downtrend. The price during the fourth wave is usually shallow. That's why we often see either a triangle, a triangle in the fourth wave, or very often the fourth wave will be swift. Talking about the time it takes for the fourth wave to be completed, usually swift, because it's becoming clear to a lot of traders that all right, we are now in a trend and there's one more leg, and the last buyer also are waiting after they have been selling during the third wave, so they are selling because the stochastic is overbought. Don't do that. I gotta be selling. Now they see the pullback, say, all right, now we have to buy. Now we have to buy, guys. Now we have to buy. They finally join in the fifth wave, all right? So a shallow fourth wave generally will not break below the 38.2% level. All right? So what we can say to traders, just say that shallow fourth wave will be between 38% and 50%. Even 50% is too much. All right? But just remember that. But here we are, I'm counting wave. This is Chevron. That's a beautiful name, Chevron. Chevron Corporated, Epic, CVS. Though the name sounds like a French, but it's not a French. CVX. Chevron. Here we are. Okay, now here we are. So I come my way here, see? First wave. What? Second wave. Happy? That's the two there. Third wave. And then the fourth wave. And the fifth wave. Is there any Elliott wave violation? No, I haven't seen one. Have you seen one? All right. Do you disagree? Maybe. Or if you disagree, that's fine. Traders do disagree with their wave count. That's fine. Okay? So this is my fourth wave now. Now that I apply Fibonacci retracement to that fourth wave, so we apply Fibonacci retracement to the third wave. All right? So we want to measure how deep is this fourth wave. We noticed that that fourth wave brought the price even a little bit below the 61.8% Fibonacci retracement of the third wave. It nearly damaged the trend. Why? If it goes into the range of the first wave, that will destroy the trend because it shouldn't come into the range of the first wave. It just stopped almost at the top of the high of the first wave. So 61.8%, even going a little bit below it, that's a very deep fourth wave. So we'll be thinking probably the way, if I was here, I'll be thinking that that trend is likely to fail because I'll think that it's just A, B, C, D, and it's coming down. Maybe come down all the way here. if I was here talking to you, I'll be saying to you, lose to me, this thing is going to come down more, forming a kind of a double bottom here before going up. But it survived. It survived. So this is a very deep fourth wave. So what are the factors that cause that? Okay, one of the main factors is the market, the S&P 500, the macroeconomic. So if you are in a macroeconomic environment, all right, and the general market all over the world is bearish, and a stock is in a fourth wave when the market is very, very bearish, it's a bullish trend. All right, so Chevron was in a fourth wave when we have the financial crisis of 2008 and 2009. Yes or no? They were at the end of the third wave. Okay, and they would start coming down. So 2008, 2009, that's when they completed their fourth wave. But because the general market during that time was very, very bearish, it forced the fourth wave to be very deep. So the number one factor is what? The macroeconomic environment. So when a bullish stock is in the fourth wave, and the market generally becomes very, very, very bearish, it can cause a deep fourth wave. Sometimes you may even see a distortion. That's why sometimes we have a tail. The tail will go into the range of the first wave, but you quickly close above it. But you want to analyze what is happening. If that is the case, you understand what is taking place, you may put a question mark on that fourth wave and give it a chance and see whether the fifth wave will be completed or not. All right? So, because of the market correction, the general market correction, okay, was bearish due to the real estate bubble in America. And also the financial crisis, the banks were suffering. It prolonged, it extended that fourth wave. That's the first factor. The second factor that can cause a deep a fourth wave is just depending on the characteristic or the financial instrument that you are trading. So sometimes they may say, Joe, what's the characteristic of a financial instrument that you are talking about? You are just making things up. Now, what I meant is that the behavior, the past behavior of the financial instrument that you are trading. Some stock, all right, anytime they go up, if they're going to come back down, if they're going to correct, they will just come down, crashing down. Now, I was looking at one today. Where is the name again? Okay. Hold on, please. This is Chevron, by the way. I'm going to show you one example very fast, talking about characteristic of financial. The past behavior, how the stock or the financial instrument or the currency or the commodity was correcting, okay, prior impulse wave. Is it usually deep? Is it usually volatile? This is what I meant by, okay, characteristic of the financial instrument that you are trading. So you just need to keep your eyes, look at the chart, what was happening before, especially on the monthly chart. What's this? Especially on the monthly chart, to recognize, okay, to identify, okay, see, this is it, this is, okay, yeah, the stock, a flat, all right, very, so you go up, come down, you see how deep is it, you know, you went up, yeah, again, you see this tail, long tail, and there's a high chance that you will do similar thing here because of the behavior of those who are trading, okay, this financial instrument, very volatile. Now, so, as I was telling you, as I was telling you now, the second cause that can cause a deep fourth wave is just the characteristic or the behavior of the financial instrument. So you want to find out how the financial instrument is behaving. All right. There's another third factor. There are other causes, but those are the three factors. The third one, which is the last one I want to share with you, is what? Guess it, my friend. Guess it, please guess it today. What is the third one? Did you get it? Okay. The alternance between the second and the fourth wave. So, according to the Elliott wave principle or theory, if the second wave is not very deep, there is a high probability that the fourth wave will be very deep. Or if the second wave takes a very short time to be completed, there is a high chance that the fourth wave will take a longer time to be completed. On the other hand, if the second wave take a longer time to be completed, there's a high chance that the fourth wave will take a shorter time to be completed. Now, this is about the alternance between the second and the fourth wave. All right. So sometimes, due to that Elliott wave principle, you may notice that the second wave may not be deep. Then, if that financial instrument is traded by a lot of Elliott wave traders, if it come onto the radar, so to speak, of those Elliott wave traders, they may be expecting a deep fourth wave, and they always ganging on it, try to push it down more and say, oh, the second wave was shallow, therefore we should expect a deeper fourth wave. And they are self-fulfilling that prophecy, so to speak. All right, it's just people believe something, everybody believe it, everybody doing it, and they end up creating it themselves. And they say, yeah, we focus it. No, they didn't focus it. They created themselves. All right, they are fully responsible for it. So because of that alternance, sometimes you may see that the fourth wave will be very deep. So those are the three main factors why, okay, the fourth wave can be very deep. So to summarize the video, the first cause is what? Macroeconomic environment, when the financial market in general all over the world is bearish in an uptrend or is bullish in a downtrend. A stock that is in a fourth wave during that time may have a deep, okay, a fourth wave. The opposite is also true. In a downtrend, when we see, okay, a rally up big time coming into the zone. So when we say deep, we are saying that going beyond the 38.2%, reaching the sweet spot zone. So the sweet spot Fibonacci zone between the 50 and the 61.8% level. We do not expect the fourth wave to behave that way, reaching the sweet spot Fibonacci zone of the third wave. When we see that, we say that, oh, that fourth wave is quite deep. All right. The second reason, as I told you already, that can cause okay, a deep fourth wave is just the characteristic of the financial instrument. Some stock they really go. Some stock they really have okay, a deep fourth wave. They are quite bullish. So anytime it come near the 38.2% level in the fourth wave, they all take it, they run away with it. Especially some of the blue chip stock. So that they have established company that they will be to see the pattern doing the same thing over and over and over and over, all over the place. Okay. And the third reason is the third factor is what the alternance between the second and the fourth wave. So I also explained to you what do we consider shallow fourth wave. A fourth wave that stays above the 38.2% Fibonacci retracement level of the third wave. The reason why we do not expect a fourth wave is because usually the third wave is extended and the momentum is very strong. You remember, check out our webpage at the Day Pro Traders about 38.2% Fibonacci retracement level. So you may understand why, or you may be able to identify the best 38.2% Fibonacci retracement level. A strong bullish momentum, all right, whether bullish or bearish, is likely to be followed by a shallow retracement. It's a market stable data. So we are watching that zone. That's why very often you will not see okay, a very deep fourth wave. But here is one example sitting right here in front of you. So what are you going to do about that? Now, okay, now you understand it, okay? So this will conclude our discussion today. Have I missed something? All right. So you may say, why? So if you say why go deep, those are the three factors that can cause it. Why? Okay. What is a shallow? You know it now. What is a deep fourth wave? A fourth wave that goes into the sweet spot Fibonacci zone, even beyond that. We don't want that because if it goes down too much, all right, if the fourth wave goes down very much, it will come to the range of the first wave, violating our wave pattern. Sometimes you will see it when, due to macroeconomic condition, the fourth wave, if the stock is in a fourth wave, it must be in the fourth wave before you may have a deep fourth wave. So the market is very, very bearish, the stock is bullish, but it's in a fourth wave. And then the people jump on it and sell it. Sometimes they will mess up even the trend. It will come into the range of the first wave. But remember, this is very important. This is what we are talking about, the reality of the market. So people go like this, they say, first, second. Though there is a clear-cut Elliott wave violation, they see it come in nicely. You see, you come, you violate it. Then they will go, but they will still go 1, 2, 3, 4, 5. They will still push it and complete the fifth wave, and then followed by a correction, and you'll be wondering, wow, what's going on here? The trend has failed here. There was a violation. But then if you understand what is causing all this mess, you just keep your finger crossed. I mean, not finger crossed, you just follow the price. If you have any question or suggestion, please put in the comment section, and in due course I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. If you think this is an essential tutorial that can help other Elliott wave traders, feel free to share with your friends on Google+, Twitter, Facebook, and Tumblr. If you have not yet subscribed to our channel, please subscribe to our channel and be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Our channel is 24 Elliott Waves, digit 2, digit 4, Elliott Waves in plural. Our Facebook page is stochastic-macd. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about, the factors, example of a deep fourth Elliott wave and what causes it. Thank you for watching.